Yo, how we doing, y'all? It's been a while, and I haven't been live in the morning session, so my day's kind of rattled. I'm used to being live, but I was watching ICT's live stream. If you guys want to see the notes that I have created of ICT's live stream, I recommend going into my Discord. I have the notes link there, so I would just click that. And then if you are not in my Discord, if you're seeing this, you're not in my Discord. My Discord is completely free. It's in the description. But basically, I want to go over today's price action, the market maker sell model that we had today. Why did we end up having it? Even though I was kind of bullish, why did we end up having this, and why did it happen in the first place? So let's kind of go over the price action that we had today. So first, just by looking at this from a top-down perspective of how we were going to today and what we were saying yesterday, is the fact that we were still bullish and we were wanting us to go into this daily fair value gap. If you guys know the action that we had today, we ended up selling off. Why did we do that though? We're not just going to come in the market. We're not going to say, hey, we sold off today. No. Why did that happen? Could we have seen it coming, and could we have positioned ourselves in a better place? I am not trading today. I'm not trading all this next week or at all probably for the next month. If you guys want to know more about that, look at my road to funded, but I'm not trading that all this week. We have FOMC and we have NFP. There's no reason to be risk on. There's no reason to come in here, come in the market, try to make money on a day like today, or a week like this week. Like, although the opportunity can be there, I'm just saying there's no reason for me logically just come in and try to rush my process just to try to make money. All right, so let's see what the market ended up doing today. What could we have done to position ourselves in a better situation? All right, and if we're just looking at this, the first thing I do want to point out is the SMT with Dow. I normally don't ever really look at SMTs with YM, but recently I've been starting to backtest YM a lot more, and just seeing that divergence between YM and NQ and ES, because they're not always going to be directly correlated, but the market will tip its hand and tell you that it wants to reverse. And if you're not able to see the sometimes divergence that we have on YM, you're going to miss out on some moves, or you're going to fail to realize that YM is really diverged, which is why we're possibly going to reverse. If we're looking at this just from the perspective of YM right here, we come back up, kind of have a retracement. This is probably OTE, probably of this range is what I would assume. Yeah, that 75% retracement. We end up having SMT at the Y here with YM. YM fails to take this high. ES and NQ both clear that high. So that could be your first confluence that we're kind of going to diverge here. But especially since this is YM, we're not just coming to the market. We're not just going to say, hey, we're going to sell off here. Did you see that market maker sell model I caught? Yeah, I saw it. It's kind of nice. It's kind of nice. It's kind of nice. Actually, let me look at it real quick. I want to see. I also want to go over FOMC today. I want to backtest some FOMC, and I want to see, where do you post it? Trades executed? Where is it? Trading floor? I see. What time was that? Yeah, that I want to go over that. That's the sell off I liked. I like that trade, and I want to go over that trade as well. Basically, SMT with YM right when we're coming into the market. Okay. Yo, yo, what's up with my chart? Hello? Hello? Nah, Trading View is gonna play with us right now. You serious right now? Alright. Looking at this, SMT with YM, and notice the failure to displace higher. We end up consolidating here. And right here is kind of just what I'm looking at. In Asia, we just have a huge consolidation. And then at the time, if you pull up your kill zones and pivots indicator, this is kind of what I'm looking at. Asia high and London. Yeah, if we're looking at this on ES, however, we come up and we have meaningful manipulation in London. So in London, or kind of like around London in New York AM, we come up and we take this Asia high here. So this is the SMT that we have between NQ and ES. So usually what you want to see is you want to see manipulation in London, and this becomes a delayed London manipulation kind of beginning of AM. And notice this, we had news today. What news do we have today? I honestly wasn't really even paying attention. I was watching ICT's live stream, and that's what I was kind of having my focus on. I wasn't really even trying to read price action today. I was just kind of trying to be a student today. So we had employment costs at 8:30, and then we also had 10 a.m. news as well. So we had 8:30, and I didn't even know that. I wasn't even looking to trade today. I'm not gonna lie, but we can go over and we can backtest. That's what we can do. We go over and we go into the charts and we can see what actually happened. So now we have an SMT, we have a big SMT with Dow, and now we have an internal SMT with ES and NQ. Forget this SMT with YM. This SMT with YM doesn't really make much sense, and I wouldn't recommend using that as a confluence. I would more use this little divergence that we have here with NQ and ES. London, we come up and we manipulate. Whenever we manipulate in London, and then look at this news. Look at the news candle. Notice how the news candle, we don't have manipulation on this news candle. Notice how this news candle is just a straight distribution. Most of the time, your news candles will have manipulation. Your news candle might have a wick. It'll look something like, here, let's see. I don't know if we can find a good example. Maybe just look at like CPI in the past. I'm not going to show it up right now. But most of the time in that news, your news is going to manipulate. But if we have already manipulated before the news event started, this news candle is just going to distribute price lower. And look at what we do. We distribute price lower, and then we put in a failure swing here. Notice what we do here. We leave PM session low here from the other day. And now we put in a failure swing. So this is where my eyes are drawing towards. I did not trade this today. I was not even looking to take a trade. I was just looking to be a student today. But here, right, this failure swing, this distribution at the news, the market is tipping its hand to us that we would like to go lower. We now have an SMT with Dow here, and we now have an SMT with NQ and ES. London has that manipulation. And what is also good about this, y'all, is the fact that we are in the daily fair value gap. The daily fair value gap on ES. We're in an area in which we would expect to manipulate if we are bearish. On NQ, however, I was still wanting the draw to be higher. I was still wanting us to come up, and I was wanting us to come into this fair value gap. But if we look at here on ES, we have already came into this fair value gap. So what does this now become? This now becomes an SMT fair value gap. So price doesn't need to go ahead, really head back up higher because we have an SMT fair value gap. But I would have still liked to see NQ work its way up here. So that's kind of where my head was at. I still would have liked to see NQ head up higher. But the fact that we had the SMT fair value gap told me that, hey, market doesn't really need to go up to that fair value gap. And if we're looking at this, we end up having displacement on that news. That news ends up distributing instead of manipulating. And then this is when, like, this price action just, I'm not going to look to necessarily trade this, but, ooh, did we actually take this low on NQ, or is that equal low? Is that an equal low? I didn't really see that. We leave equal lows on NQ. Look at this. Look at this. I didn't even notice this. We leave equal lows on NQ. So this now becomes even higher probability that we're going to head lower. And look at this. Look at this. Is this not clear? It's not clear of where the market would likely reach for. Is this not clear where the market would likely reach for? We now have had the SMT up here. The market's tipping our hand that we do want to go lower. We have an SMT around there. Then we have distribution on the news candle. And then we come back up one more time to now sweep this high to then trap traders that are looking to take a short here within this fair value gap. Hey, there's a fair value gap. We have equal lows. Let's short this. We're going to look to short this. I'm going to short this. I'm going to put my stop at this high, and I'm just going to short this. I'm just going to short this. I'm just going to short this. And notice the news candle as well. Look at the news candle. We did not have a wick at all on this news candle. Normally, when I see a news candle, I'm at least expecting a wick. Usually, when you have a news candle, your wick will, sorry, that's a weird wick. Your wick will at least be something like this. Most of the time. Most of the time, when we have news, high impact news, we will have a wick. We will have a wick. We never had a wick. So this now becomes, it's called a devil's mark. You guys should do more back testing on that. But anytime we have a devil's mark, we're likely going to come up and we're likely going to take that high. That's what we end up doing. We end up taking these highs here and then forming an SMT here. In terms of entry points here and entry criteria, I don't think that this move was the easiest to gauge and the easiest to read, but just by looking at this, low resistance liquidity, low resistance liquidity. Hey, we come up, we take this high here. Are we ready yet? Nope. We have no displacement lower. There's no displacement lower here. Price does not need want to go lower here. No displacement. We come in, come back in, and we respect this fair value gap to then get bought up one last time, to then form an SMT, to then have, we have an inverse fair value gap. We finally break through. We use that as inverse. If you're an inverse fair value gap trader, you could have taken this inverse. So that would have been a okay entry that I would have liked. And then you could have target, look at this. What is this, y'all? Original consolidation to then trade away from, to then have first stage, or there's only really one stage in this market maker buy model, but I don't really like this market maker buy model. I'm not really going to use this too much as confluence. I mean, yes, I guess you could say this all is buy side of the curve. So yeah, technically this is all buy side of the curve, and then this now all becomes sell side of the curve. So you see you have buy side of the curve, and then you have sell side of the curve. Notice here we had a deep retracement as well. A deep retracement back into that inverse fair value gap. The trade is still valid to end up taking down to these lows. Other than that, I don't really like this trade. This model. It's not the trade. This model isn't the cleanest in my opinion. But where could you look to enter? You have that inverse fair value gap here. Is there a breaker? This kind of would have tripped me up. I'm not gonna lie. If I was looking to trade this, we have a breaker here. So this is a mitigation block actually, because this is an higher high. Where is the breaker? The breaker's here. So you have the breaker here on the 1 minute. Breaker, inverse fair value gap. We never really create a clear fair value gap, but there's very small imbalances here. So you could say breaker, we have a breaker, inverse fair value gap, and a fair value gap, and now we have an order block here. This now becomes your order block. It's also the inverse fair value gap. Notice how price holds up there. It's not the cleanest, but this is why we use stop losses, because price isn't always going to be clean. Like there's going to be some areas in which price just isn't the cleanest, and that today is a day when price action just isn't going to be the cleanest. Why do you think that is? Why do you think price action today wasn't the cleanest? Why? FOMC tomorrow, NFP this week? Maybe? Maybe that's why? Alright. That's maybe why price action wasn't the cleanest today. But still, the models are still there. The models are still there. Price action will repeat on days like today. It sure will. But it won't be the cleanest because we have FOMC tomorrow. We have things like FOMC tomorrow. Alright, and now if we're just looking at this, sell side of the curve has completed. If we zoom out, we're looking, we have this SMT with Dow. So I am just looking at the maximum. I'm looking to see this low get met at the maximum. This now becomes your draw. This low here. Notice as well, what do we have here? Why would this be higher probability for us to head back into? Why? Just by looking at this on the hourly chart. Why would this be higher probability for us to head back into? Because we have an imbalance nestled within that low. Why does the market move? To hunt liquidity and to rebalance to a fair value gap. That's all I'm going to include. I used to say we hunt liquidity or we rebalance it in equilibrium, but I don't even look at equilibrium anymore like that. I just look at internal range liquidity and external range liquidity. Whenever we have a low nestled within a fair value gap, that is higher probability for price to target. Because if we zoom out, let's see in the 4 hour, we have that 4 hour imbalance. This now will become an original consolidation on a lower time frame. Let's zoom in to see where is this possible original consolidation. It's right here. It's not the cleanest. This now becomes your original consolidation in the market maker sell model. So now we're looking for sell side there. And this is then when you could possibly look to take another trade. And like Anthony was saying, Anthony caught this, and this was the trade that I kind of want to bring your attention to. This trade right here. right now, price has sold off. Look at this. Look at this. And look at the inability for price to come within this fair value gap. Notice how we have this fair value gap. Normally, if I'm bearish, I would like to see us to maybe come within this fair value gap to then look for a setup to go short. But notice how price isn't even willing to come within this fair value gap. We kind of act like we're going to poke above, and then we don't. Let's zoom in. Let's zoom in to the lower time frame to dissect what price is doing here. And I was actually watching this price action live, and I'm not going to lie, y'all. I was expecting price to come back within that 15-minute fair value gap. But I'm not looking to trade that. When we are just bearish like this, when price is clearly bearish, anything like this to look to rebalance price is just a little bit lower probability. The only time I'll really look to, or I will say in the future, anytime I really look to rebalance price, there has to be some form of underlying narrative. We don't have like an imbalance to the left that we're bouncing off of. We haven't just taken sell side liquidity. So therefore, price does not need to rebalance within this fair value gap. And notice how price just doesn't rebalance to this fair value gap. Like, this is just very bearish. This is very bearish delivery. So we're looking at this and we're saying, hey, price could come back up into here, and therefore we never do. We never come back into there, and then we end up displacing lower, generating more sell side liquidity to then come back up into this nice 15-minute fair value gap. When we are bearish, when we're just as bearish like this, notice delivery, like I was saying, we're not coming within this fair value gap. When we're as bearish as this, why would you look to long this? Why would you, what would make sense for price to come all the way back up here? What would make sense for that? We failed to come back within this fair value gap. Now we've had more displacement. Price definitely wants to head to this low. This is the draw. This is what your eye is looking at. We have this low nestled within this imbalance, and that is what you're really looking for, and that's what the market ended up delivering. As we can see, a game of probabilities. Where are we likely to reach for? Where are we likely to head? Let's zoom into this and let's actually dissect this. Sorry, enough of me yapping. I already have a box up. I don't know what I'm doing right now. But as you can see, even here, like I've been saying, price action is not the cleanest. Why? NFP. So we'll see. What's today's P&L? I've not traded today. I'm not trading at all this week. What do you think about ICT's live today? I feel like his live stream today was all right, but I mean, that's just because the opportunity wasn't really there. It wasn't really that there. But I thought it was pretty good. And we're expecting the 0.5 level of the Sibu weakness. Ooh. I also want to bring up this standard deviation move. Wait, I didn't even look at this. Were we respecting consequent encroachment of this gap? I feel like I did look at this. Well, notice the wick as well. Look at the wick. Look at the wick. The wicks will show you the damage. This was a great trade, honestly. Look at the wicks. We're respecting consequent encroachment of this fair value gap. So that means price is very bearish here. This is very bearish signature. So we zoom in. What are we looking for? As you can see, we have this nice manipulation leg, this last manipulation leg. And I marked this out. You guys can look at your chart and you guys can see this. But this is an SMT fair value gap. It's like really not the cleanest. I guess you could also classify this as an SMT, but notice where price ends up reversing into consequent encroachment of that fair value gap, an area which you expect to reverse. We end up forming it. I guess this isn't really an SMT fair value gap because I wouldn't really count this as a fair value gap. I would say this is more of an SMT. But this isn't like a prominent high or low, but it's still an SMT. It's still an SMT. It's still something you got to be aware of. We end up having displacement lower. There's not really too much of entries offered. I would say, hey, maybe there's an order block here. And then I think this actually is Sut's model. This actually is Sut's model. Notice we have this breaker block. In there, we have this order block that gets formed. The order block that gets formed inside of the breaker, that's going to be your high probability trade. So this could have been a perfect like little Sut's model. I don't know if I really like it because I was like backtesting one day and I was getting like overly biased over this. And now we expect to see this held as a breakaway because we have PD arrays supporting price. This ends up being a nice trade. And this is also a thing. Like as a trader, especially if you aren't profitable like me, are you funded yet? No, I'm not funded yet. Especially if you're not profitable yet, bro. Why would you even put yourself to break even? Just accept the risk that you're putting on the table, and this is a perfect example, prime example. Like the model's there, we're coming back in, the narrative is there. Why price needs to go lower is there. Just trust it. Just trust it. And that's kind of like my motto is trust the model. Trust the model. Trust what price is going to do and trust the model that we are in. We are in market maker sell model. We are in sell side delivery. We've had buy side delivery. We now have had that change in state delivery on the 1 minute. I want to zoom out to the 5 minute. I want to see. Where was the 5 minute change in state delivery? Right here. 5 minute change in state delivery here. Then we end up claiming this as the order block. Price doesn't really end up, we kind of end up retracing back into it here, but you guys get what I'm saying. All right. Anyways, so that was the only other setup that I liked. So two sell models today, and today I was kind of bullish. But that was yesterday. It obviously all depends on what the overnight session does. And notice as well, I've been backtesting this a little bit. Notice as well, we had London manipulation. Anytime that we have London manipulation, especially a day like this to where we had 8:30 news, and look at the news, y'all. No manipulation on the news. We just had distribution. We left equal lows. This is a clear target. Clear S-day target. And honestly, I kind of wish that I wasn't in the ICT's live stream because I wish I kind of could have seen this for myself. But it's always nice to go into someone that knows more than you and get information, especially from ICT. That's not me meat riding either. That's just me saying. And notice this wick too. Notice how well we treat this wick. I don't love ICT how he always says that wicks are gaps. He always just says that wicks are gaps. But why are wicks gaps? Why do you think he says that? Why does that make sense? Why does that make sense? Let me see if I can find an example as well. I want to find an example. Is there like a clear? Let's see here. Why would it make sense that this wick is a gap? Why would that make sense? That this wick would be a gap? Because we drop down to the lower time frame, and it's not the cleanest here. Maybe there's an hourly imbalance. But if you head to the lower time frame, it is an imbalance on the lower time frame. So anytime there's a higher time frame wick, that is a lower time frame for value gap. And look at this. We have a BPR. We have a V-shaped reversal. So this will become sensitive because if we zoom into the internal dynamics of that candle, those dynamics are going to be you're going to have imbalances within there. Like just by looking at this daily candle, okay, sure, it's a wick. Oh, consequent encroachment of this. I'm looking at consequent encroachment of the wick. What does that really mean? Why would it make sense for that? A point to be sensitive. Because if we drop down in time, we now have an imbalance. And I can ensure you that, let's zoom into the 15 minute. Let's see if we can see anything else. You now have an order block on the lower time frame. So this wick, there's more structure within it on the lower time frame. And price is fractal, so that goes with anything. Say it's a 5 minute wick. Okay, if you zoom down to like the 30 second, there's gonna be order blocks within that gap. There's gonna be things that are defending it, protecting it, if that makes sense. But anyways, I wanted to bring up this nice little resource that I found. Shout out 100% to the creator of this guide. I'm not trying to steal anyone's information. That's not what I'm doing. I'm trying to spread information. That's what I'm doing. So shout out to Trader Diego on Twitter. Huge shout out to him. But we're gonna refer to his PDF that he has posted here. But actually, I kind of want to go over. All right, we'll go over this, and then we'll go over bias for tomorrow, and then we can go into backtesting. I want to backtest like at least 2 or 3 FOMCs, and then I kind of just want to just backtest in general, if that's cool with y'all, which it probably is, and I don't really care if it's not cool with y'all, because that's what we're gonna do, you know. So shout out to Trader Diego. I'm not saying that I made this PDF. He's on Twitter. Shout out to him. I'm not trying to claim this information, And let's see. Okay. So FOMC. What's important to note about FOMC, if we actually look into FOMC. Hello? If my Wi-Fi loads? Brother. Okay. If we go into FOMC, we can notice. Yeah, I think I've been exhausting my PC. Ooh, we also have PMI tomorrow. Okay, tomorrow, look at how much red folder news that we have. Look how we have 1, 2, 3, 4, 5, 6, 7. We have 7 red folder news drops on one day. I'm not trading at all tomorrow. I'm just gonna tape read, but I will be live tomorrow. But look at the volatility that we're gonna have today. We are going to have a very impactful day tomorrow. So yeah, tomorrow's definitely gonna be exciting. So we'll see. So anytime at 2 p.m. The actual rate decision gets dropped. I'm pretty sure. But at 2 p.m. we have this original red folder news, and then at 2:30 p.m. is when Powell comes on and Powell talks. So at 2:30 p.m. is likely when Powell steps on the stage and when Powell talks, and that's why at 2 p.m. we'll have the first manipulation move, and then at 2:30 p.m. we'll have the second manipulation move. So it's a two-stage high volatility release. We'll have that first news event drop at 2, and then we'll have the 2:30 FOMC press conference, which is actually Powell himself speaks, or whoever the FOMC chairman is or chairwoman. So FOMC is a two-stage volatility. There's going to be 2 stages of manipulation. The first stage is going to come after 2 p.m. and the second stage is going to come after 2:30 p.m. We want to be in, and like there's many ways to trade this. So I'm not trying to tell you about how to trade it, but I just know myself, I would rather trade that real manipulation leg. So when I come into FOMC, I'm looking to trade the second stage manipulation. I'm looking to trade after that 2:30 news. I'm looking to trade after Father Powell has come onto the stage. So we're likely going to get manipulation aimed at quickly engineering liquidity, and then another manipulation to take it out, and then the distribution move, if that makes sense. You guys can obviously access this PDF. It's on Twitter. If you guys want me to, I can link it into the Discord. But before FOMC, you don't want to trade at all. Like, I'm not looking to trade. I'm just gonna let AM session play out. Normally FOMC, pre-FOMC, you guys know probably. It's just not worth trading. It's just not. Like, why would you want to trade that? Why? Even if you could trade it, why would you even want to do that? It makes no sense. I am kind of interested though. The fact that we have all this red folder news before FOMC, I think that there could be some volatility before FOMC, which could kind of be interesting, but I'm just still expecting before FOMC to be kind of slow consolidation. Why would that make sense? Because FOMC is going to be a high impact news driver. A lot of banks and a lot of large institutions, a lot of large hedge funds aren't going to look to trade before FOMC. They're going to look to trade after FOMC because that's where the volatility is. Why would you try to trade before the volatility happens? It's likely that in the last hour of the day from 3 to 4 p.m., the algorithm starts presenting more opportunities. Yes. And then also know FOMC meeting minutes is not FOMC. Anytime you see FOMC meeting minutes, that's not FOMC. That's just the news release of what happened in the actual FOMC. And that release is like 3 weeks after the FOMC. So this is kind of what you're looking at. So at the first stage at 2 p.m., you have this original manipulation move. And then at 2:30 p.m., we end up having this other manipulation move. So we'll do some back testing for sure, but we're just going to look at this and we're just going to say, hey, 2 p.m., we're going to have that original manipulation. And then at 2:30 p.m., we can expect to see the second manipulation move. All right, and now I want to go into my bias going into tomorrow, and then and then we can back test. So that's what we're looking at. A lot of consolidation tomorrow open. I'm expecting so because it is pre-FOMC, but just note that we do have high impact news. So there could be something, but I'm not even going to look to trade it at all. I'm not going to look to trade it. Obviously, we have FOMC. So if we're looking at this right now, just the way NQ is looking, we still have these stacked equal highs. We still have these equal highs. We still have this nice original consolidation. So right now we're at a point to where price delivery has now reversed again. We have now reversed in price. And what do we need to see in order for price to reverse? In order for price to reverse, we need to have a higher time frame PD array, and then we need to have an SMT to qualify a reversal. Why did price reverse here? Higher time frame PD array, ES was in the daily for value gap, and we had an SMT. So that's why price was able to reverse here where we did. If we're looking at this in forms of NQ though, like if I'm looking at this and I'm only looking at NQ, this is why it's very important to have ES, NQ, DXY, YM. That's why it's important to combine these all together, because if you're just looking at NQ, you're going to miss out on what the other correlating assets are going to do. So right here we had SMT with YM, and now we've had displacement lower. We've had a structure shift lower. Notice this low. This is low you're really paying attention to. And notice this fair value gap as well. Notice as well as this, we didn't just poke and take this low. We didn't just do something like that. We came through and we displaced through this low. Just by the looks of this looks clear that we are kind of now shifted into a market maker sell model. Okay, ES or NQ had left this fair value gap. That is what I wanted to see become the draw on liquidity. But price does not necessarily need to go there. Like, it's about being flexible. And the market has showed us that, hey, we've had SMT here. We've had displacement through lows. Price delivery doesn't necessarily need to come back up into this area. Obviously, there is a possibility that we do work our way back up there, and we could continue on market maker buy model of this curve, and this could just be a deep retracement of this side of the curve. Notice how we could still be in buy side of the curve, but I highly doubt it. So that's something to note. So right here we have sell side and then I have buy side. But ES has taken these highs. ES has come within this fair value gap. So we are treating NQ like we have taken this original consolidation. We are treating this like we have completed the original consolidation. So that's kind of how I'm going to treat it. By looking at this, now we have buy side of the curve here. What does this now become? Buy side of the curve here, and then this now becomes sell side of the curve. So, price has shifted bearish. We are now in bearish order flow. We are now respecting bearish PD rays. We now have had displacement lower. We're respecting bearish PD rays. So, in order for order flow to now reverse here, what do we need to see? Higher time frame PD ray and an SMT. So, just by looking at this fair value gap, I don't doubt that we're just gonna run straight through this and take this low. Tomorrow we're gonna have FOMC, so we're going to be looking for manipulation. Where on this chart would FOMC likely occur? Just by looking at this. Well, we've kind of had our manipulation, so it's kind of tricky in my opinion right now. Just by looking at NQ's chart, I don't know where manipulation is likely going to occur. If we zoom out, let's look at ES. However, if I'm just looking at this, I think that we could have a manipulation move at these lows to then come back up and target these highs. So I think that we could have that, but obviously I got to see what price does. Like, I'm not here to predict anything. I'm just here to have a bias, and then that'll put me in a good position to be able to execute. But just by looking at this, I think that we could come back lower to then have like maybe an SMT at the lows here to then head back higher. But if we are looking at this, just by the looks of this, like we have come within this daily for value gap, this kind of is the manipulation move. Higher time frame, this looks bearish. This just looks like a retracement to then sell off further. So this is what I kind of like. This is what I kind of like. This is what I'm kind of looking at right now. This kind of looks clean. So we could be in bearish delivery. We are in bearish order flow on the 1 hour. So that's kind of what I'm looking at. All right, let's look at YM as well. Let's look at YM. And I'm not sorry, I'm just kind of like beating around the bush. You're looking at YM though. We have had that SMT here. Look at the daily. This looks like we're clearly gonna take these equal lows here. Notice this failure swing here. Like, this is clear as day that price is gonna end up going lower. I'm expecting this in terms of market structure shift or market structure to be the intermediate term high. This is now silver bullet. I'm expecting a fast, quick, speedy sell off to these lows here. So with that being said, for FOMC, my expectation or What I'm looking to see is us come back down to these lows. We've kind of had that manipulation move between these highs, between NQ and ES. So I'm expecting to see distribution during FOMC, but we could have manipulation, which there was a previous FOMC which kind of tripped me up because it was kind of the same thing where we didn't have true manipulation because the manipulation move already occurred on the charts. And I kind of want to bring up that example. Let me show this example real quick before I then go into the charts. Before we then go in backtest. I do want to look at this. I've been backtesting a little bit on some daily profiles, and I found there was FOMC. When was the last FOMC? I'm pretty sure it was then. FOMC. Here we go. So notice on a day like this, and I know that this chart's a little bit messy, but notice on a day like this to where we're gonna go back in because there has to be an FOMC. Not FOMC, an SMT here at the lows here, at least within Dow. Like in no doubt in my mind, I feel like Dow definitely came down and took this low here. Like there's no doubt in my mind that happened. We can go back and we can look at that because like this just looks way too clean. Right here, I was expecting to see manipulation, and look at FOMC, we pretty much just distributed. So that's exactly what I'm expecting to see on this FOMC. Notice how we are in a clear market maker buy model. Clear market maker buy model. Notice as well, YM. We're in a clear market maker sell model. Let's just pull up YM. I know it's not the greatest to look at YM. I know you probably shouldn't trade the majority of your trades off YM because I don't trade YM. But just by looking at this, clear market maker sell model, this is what I'm expecting to see. I want to see distribution during FOMC. Okay. Now let's go in and then let's backtest. Let's backtest a few of these FOMCs. So previous FOMC. Let's see. Okay. We'll start out with we won't go over that one because that's the one I just saw. Let's go March 19th. Okay. March 19th, and we're just gonna backtest pairs. ES and Q, and then I'll pull up YM as well. Why not? Oh yeah, I also want to look at dollar. Let's look at dollar first. Sorry, let's look at dollar first. So if we're looking at dollar, let's pull up DXY. DXY. I'm now anticipating this to be the swing low. We've now created a swing low in time, and then we've been saying, low resistance liquidity. This is looking beautiful. This is looking exactly what we're expecting. This would go very nicely with that bullish bias. And I feel like on FOMC, we might get pushed up all the way up here to these highs up here and into this BISI or SIBI, sorry. We could get that on FOMC. We now have had a swing low put in place in the market. We're now clearly showing structure that we want to head to these low resistance. We're now finding support off this order block, off this fair value gap. This looks nice. I do not expect to see dollar go lower. Notice how we've had to have this swing low. So it does not make sense for dollar to retrace all the way back down here. But it is FOMC. Notice that can happen. I'm just going to say anything can happen on FOMC and just leave it at that. All right, so that's what I'm anticipating in dollar. Notice how we have this nice original consolidation. If we zoom out to the monthly, what does that original consolidation truly become? The original consolidation on the daily. Notice how whenever we have an original consolidation on the daily, it's just a monthly PD array. And what is that monthly PD array? That monthly PD array is this monthly high. Because a PD array is external range liquidity. External range liquidity is a PD array. A line is a PD array. You see here how we didn't have manipulation? I actually want to... Wait, what day was this? This was the 15th, I believe, right? The 20th. I want to see, do we have an SMT with Dow? Well, let's look. Or maybe even with ES. I don't know why I'm saying Dow, but I expect it to be with Dow. Okay, can I go back that far to the 20th? Wait, was that January or March? March 20th. Okay, here's the area and price action we're looking at. pull up YM. I feel like we had to have had a SMT here. We've had to have. Wednesday. Okay. What did I say? What did I say? Do we not have an SMT here? I didn't even look at that. I didn't even look at that. But notice how price just immediately shot up here. Like there it just makes sense. It makes sense for us to have an SMT within the market. It makes sense. Like it would not make sense that we were to leave all of this low resistance liquidity and shoot up like this unless if we had an SMT here. So I will say Dow, I've been backtesting Dow a lot, or a lot more than I have been, and looking at YM. If you're not looking at YM, like you're gonna miss out on some of those moves, because back then, like I wasn't looking at YM, so I wasn't able to see that. If you're not looking at YM, like you're not gonna see some of those SMTs, some of those key SMTs, and like that would have been able, you would have been able to see that. You would have seen it a lot clearer. What's good? How you doing? How you doing? It's been a minute. It's been a minute. I forget. I don't know how to say your name. Is it Mawad? Mawad? I don't want to mispronounce it. I'm sorry. I'm sorry if I did. I don't want to butcher your name. All right, let's go March 19th. Well, we'll do March 18th. Wait. So, oh, that's. Wait, that was the day we were looking at. Okay, what was the previous one? April 30th. April 30th was the previous FOMC. Okay, let's get on this. Wait. January. Okay, why is it? Oh, this is showing 2024. Oh, I see. I was like, what? So January 30th. It's January 30th. Okay. Sorry. January 30th. Okay, we can go to Tuesday. Bro, these days I see a lot of hating ICT. I just started learning. I started learning 2022 model on episode 10. What do you think? I took 2 good trades in my funded with the same model. What do you think? I think the 2022 model is definitely good. Definitely good. The 2022 model is very nice. I like the 2022 model. But that being said, like the 2022 model is just you gotta know, it's all about narrative and context. That's all the market is. Narrative and context. Because like a fair value gap isn't gonna hold just because it's a fair value gap. All right, so this is Tuesday at 6 p.m. So we're kind of just gonna speed up price to new day opening gap here. Okay, we're just gonna speed up price to FOMC because FOMC is Wednesday. I just don't want to miss it, and I don't want to have to go back over. Okay, this is Wednesday, 8 a.m. When does news release? 2 p.m. Okay. Okay, let's look up I'm gonna put up dividers so we don't miss it. 2 p.m. and then we'll put up another one for 2:30 because that's when we should have the first manipulation and then the second manipulation. You know, say we'll highlight this one red, and then we'll highlight this one. Let's do purple. Let's do purple. Okay. So right now, just by looking at this, let's zoom out. Order flow was bullish, and now we've had a market structure shift. Now I've had change of state delivery. I want to look at YM because I want to see. Oh, the SMT's here. So we have SMT at the highs. So this can be a reversal. We've now gone from external range liquidity. Where are we anticipating price to head back to? Internal range liquidity. We're now within this daily fair value gap. And we also have a fair value gap lower here that we could draw into. So right now, this looks pretty bearish. If we're looking at this on terms of ES, we've now taken external range liquidity. So I'm anticipating internal range liquidity. This looks nice. So we're looking at this external range to internal range. Okay. So that's kind of the context that I'm going with right now. let's zoom out to the hourly now. Clearly bearish. Want to see, do we come up, manipulate highs, and then head lower? That's kind of what I'm looking at right now. So I'm going to mark out some of these highs to see if price wants to come back all the way up here and take highs. Okay. Let's zoom into the 15 intermediate term structure. Bearish right now. We kind of had like a kind of a generous move lower here. So just know that we do have an SMT for value gap here. We could end up reversing in price here. Okay. That's what I'm looking at. And we have an SMT at these lows here, which I'm not going to say SMT, but just something to know. Okay. Let's get into it. So we have our 2 p.m. and we have our 2:30 p.m. marked out. I'm going to mark out this dealing range here. What are we traced to? Equilibrium. Right now, overall, bearish bias. But I want to see manipulation, because we know that we're likely going to have manipulation here. We're likely going to have manipulation at that 2 p.m. 2 p.m. gets released. We have manipulation. Yeah, we have taken these lows. Would it make sense for price to reverse here? Would it make sense for price to reverse here, y'all? Would it make sense? We have SMT at lows. Let's look at ES. Or let's look at NQ. Are we in a higher time frame PDRA? We're in a higher time frame for value gap. So it would make sense for price to possibly reverse here. So just by looking at this. Obviously, FOMC is very fast, very quick, to where I feel like trading the lower time frames, like the 30-second, would be... You might miss an entry if you're on the 1 minute, but I wouldn't recommend it. Okay. So I'm looking to see us come back up, and I want to see us take this high. I'm looking at this, and I want this to be the original manipulation move, to come up, take this high, to then have the real manipulation move to head back down to these lows. That's what I'm looking at. So I'm gonna go ahead and long this. I want to see this high be the draw. Okay, 1.25 versus reward. Or we'll just see what price does. We're just gonna see. I'm not gonna put anything on, but I'm looking for this high. Okay, we're waiting. We're waiting. So in terms of first manipulation move, we've come back down. We've taken this low. We have an SMT all the way within here. We're within a higher time PDRA. We're within a 1 hour for value gap. So this could be the manipulation. Obviously, you would like to see price run here. So the fact that we haven't is kind of concerning. Okay, so this should be the real manipulation move. This should be the real manipulation. Notice here, we come up, and we have now taken these highs to then head lower. And then this could have been an internal market maker sell model. Notice here, we come back up into this fair value gap, and then, ooh, we actually don't end up taking this low. So maybe taking this low and treating this as a wick, but that would be very internal. Okay, let's also have ES pulled up here so we don't miss. So now we have an SMT here. I'm expecting us to head up and take these highs. I'm gonna put a trade on this. I'm gonna set a market order, but just know that I would probably be in real time. I would be looking to like actually take an actual entry. This is why I don't love backtesting, but we'll say 2%, and then we'll put a market order. Okay, looking to see these highs. We'll just see if it happens. Okay. Why would it make sense for that to happen? Why would it make sense for that to happen? Why did that work out? Why did that work out? At 2 p.m. At 2 p.m. we came down and we had a real manipulation move at 2 p.m. Okay? Look at this huge divergence here. On the higher time frames. Price is bearish. We have bearish order flow. So FOMC is just an excuse for us to rebalance price. And if we're looking at this, just by looking at the intermediate term time frame, so this is a 15-minute, we've already had quite a move lower. So I don't expect to see too much of a retracement lower here. but just know it is a possibility. So we come in, we zoom into the 1 minute structure, 2 p.m. That's your first manipulation. We come up, we take these highs. We've now triggered these buy stops. What is this? We triggered buy stops. I'm pretty sure this is called like double purge theory. I've been doing too much. I've been doing too much recently on Twitter, bro. But just look at MMXM Trader, double purge theory. I'm pretty sure this is what that is. But I haven't done pack testing with that, so I don't know too much about it. So we now come up. We have taken these highs here to come back down to take these lows here. So now we have SMT divergence here at the lows. And now we have another internal SMT here. The market has tipped our hand that we would like to go higher here. We now have overlapping SMTs in a higher time repeat array. That's very crucial. In a higher time repeat array. So now we've had that first original manipulation at these highs to then have SMT here to then pull back to the breaker and the fair value gap. This actually was a nice model. Breaker, fair value gap to then have buy side of the curve here. So I'm going to go ahead and post this in the Discord. Post this in the Discord, but this ended up being very nice. I'll put this in the Discord. And then I might also put this in my journal as well. I'll put it in trading floor. FOMC. What day is this? This is the January 24th. Actually, I'm gonna wait. We're gonna wait to screenshot it until the full move is over, because we could still. This could just be the 230 manipulation to then have that real manipulation move back lower. But I'm expecting continuation here until at least this high. So this looks like the low hanging fruit. We now have this high nestled within this fair value gap. What was I saying earlier? Anytime we have a high nestled within a fair value gap, that's going to be higher probability for us to retrace to. Let's see what happens. Right, it gets hit. And once that draw gets hit, you could expect to see us go from external range liquidity to internal range liquidity. So I know that we're likely going to retrace this fair value gap. Likely. We're more likely to. Notice what price does. We retrace that fair value gap. And then we get that real move lower. So this was your first manipulation move to then have the real manipulation. And today this FOMC, like in the PDF, it says the real manipulation should be at 2. So we've actually had 3 stages of manipulation. We had 3 stages of manipulation here. Because this would also make sense. This also would make sense. In order for me to take a trade off of this, I want to feel comfortable. And I don't feel comfortable in my stage as a trader to really full on be like risk on during FOMC. But notice here, displacement lower. Let's zoom out here as well. Come back up. That now becomes your turtle soup to then have displacement lower. So come back and we complete sell side of this curve. Obviously, okay, so I was talking about this earlier on in my trading career, or like I would say like 2 weeks ago, and this SMT, or I was saying like it wouldn't make sense for us to target this low here. I used to say that this wouldn't make sense for us to target this low because it is the manipulation. That only matters until the draw is met. Once the draw on liquidity is met, none of these PD arrays on the left side of the curve matter, or none of the SMTs on the left side of the curve matter, if that makes sense. So once we come up, and once price has delivered to buy side, none of the SMTs on the left side of the curve matter, nor do none of these order blocks or fair value gaps matter, because now we wouldn't expect this to hold. We would not. Why? Because we have changed the state of delivery. We've had that smart money reversal. Did we actually have an SMT here? Probably not. Or probably because these are diverged. Yeah, notice that. Notice that on ES, SMT. This would have been a nice day to trade. This is a good example. I'm gonna study this a little bit more before we go into tomorrow, and I'm also gonna bring it up on live stream. So I'm gonna be live a little bit early, and I definitely want to bring up this day as a big prime example. This day is very nice. This day is very nice. This day is very nice. Very nice, clear. And then the rest of this day, I'm not really looking for much. You could have a little market maker sell model here. It looks like after we retrace this, probably now becomes a 15-minute fair value gap. No, definitely a 5-minute though. 5-minute fair value gap. 5-minute fair value gap. It's gonna be a lower time frame. Higher time frame retracement. It's gonna be a lower time frame market maker model. That's what this was. Since we're so bearish, since we have sold off so much, since we've already had the manipulation move, we don't expect to see us really reverse here. We expect for us to continue. And notice here as well. IPTA market cycles. We have consolidated here, so we cannot go from a consolidation to a reversal. So we must consolidate. We must go from a consolidation to an expansion. And this could have been a market maker sell model if you just know that. We cannot go from consolidation to a reversal. And notice how we've already had 1, 2, 3 manipulation moves. I doubt that there's going to be another manipulation move, you know? Like it's more probable that we're going to come back and take this low and then come all the way back up and take this high. So, yeah. All right, I'm going to put that in the Discord. What day is this? Wednesday, January 24th. Or, wait, 31st. January 31st. FOMC. And then I'm going to say 3 manipulations. Okay. All right, putting that in the Discord. We can go ahead. Actually, I'm going to keep this because I'm going to refer back to this tomorrow before stream. I actually like that. I'm going to keep that session. Dang, I got a lot of sessions here. Okay. When was another FOMC? 2023. Okay. Which one should we go? Which one should we go with, chat? Which one should we go with? If I even have a chat in here. I don't know. I don't really care either. This is all for documenting purposes. We'll go with March. Or no, we'll go with September. We'll go with September. We'll get spicy with it. I think I'm gonna backtest 3 of these. We'll backtest 3 FOMCs. So we have 3 case studies. We'll see. September 19th. Count balance. We'll say 1,000 pairs. Yes. We never looked at YM, but I didn't really want to look at YM, and I didn't really need to look at YM. Okay, here's what I will say. The only time I'll really look for YM, or this is kind of like my rule now, is I would only really want to look for SMT with YM if I would expect to see an SMT and ES isn't providing the SMT, if that makes sense. So like if I'm looking to see a possible SMT like that example I had earlier, and ES isn't showing me an SMT, then I'll go to YM. But I will say YM is very important. What are you gonna backtest? FOMC. That's why we're here. We have FOMC tomorrow, so this is just FOMC backtesting. FOMC backtesting. All right, if this will load, this should load. Okay. We'll kind of skip ahead. Ooh, right now, structure looks bearish. Expecting the draw to be these lows. So I'm expecting right now, before we even head into this, I'm looking to possibly see manipulation distribution. That's what I'm possibly looking to see. The cam is lagging. Is it bad? I dropped my face cam this morning. I'm not gonna lie. Okay. Tuesday. Okay. Oh, I didn't even look at like the daily profile or anything yesterday, or on that previous example. That doesn't really matter too much. Okay. I'm going to put out dividers just so I have them already. So 2 p.m. And then we'll put another one for 2:30. Okay. We'll have this one red again, and then the second one purple. Okay. Cool. We'll kind of skip our way up to FOMC because we don't really care about any of this price action. We don't care about any of this price action at all. Okay, 10 a.m. Market opened. Okay, gotta be careful I don't accidentally spoil it. All right, we'll start right here. Okay, top down, top down. Okay, I want to look at the sessions. What did the sessions do? So it looks like in here we had New York AM reversal. So just by looking at this, I'm expecting New York continuation to these lows. We've kind of had this manipulation, so we probably have an SMT here, at least between maybe the Dow. There might be an SMT. Let's see. If we have an SMT there off rip, or maybe even between these highs. It's not between ES. Maybe this high? Maybe this high? No, we don't. Okay. Let's pull up YM. I was like, what? Okay. No. YM, we do have an SMT here. So there's this SMT. Damn, YM is like, holy. YM's ripping. So this is definitely, in my opinion. Okay, so the SMT is here. There is an SMT. So anytime I'm looking for SMT, I'll check Dow if ES doesn't provide one. And basically, we've had the manipulation. We've had New York AM reversal. I'll look to possibly see New York AM continuation, but we also could see an actual manipulation move here at this FOMC, because that's what FOMC does. It provides manipulation. Okay. So let's. Looks like I've been backtesting over here. I haven't seen this price action before, so don't think that I've seen this price action. We have a 15-minute for value gap above us. Let's mark out some higher time repeater rates just so we have some context of like what's going on. Higher time frame, we have these low resistance highs. Okay. Ooh. This could go either way for me. I want to see manipulation in one of these directions, and then I'm gonna go the other direction. Because right here we have low resistance liquidity, and then we have an imbalance up here that we could target. We have kind of taken external range liquidity here, so you can frame external to internal range liquidity. That's kind of a move that I would be looking for, but let's see. We also have this BPR here. This looks like a reversal. Order flow right now currently is bullish. Right now currently at this moment, it's kind of bullish, but we do have this. I want to see manipulation. Let's see what happens. FX replay is lacking right now. Come on, FX. Okay. Here we go. Let's just see what happens. Okay. Yeah, I'm gonna be pretty bullish here. Probably. I'm probably gonna be. I just don't think there'd be too much opportunity in framing a short setup here. You know, like we're already kind of, or I guess we are in premium of this range. So we'll see what happens. I want to see the manipulation happen and then look to. Okay, this now looks like. Okay. The manipulation happened. Zoom out. High time repeater right here. Zoom out. SMT maybe. No, but we possibly could have one at this low. It looks like. Okay, we'll see what price does here. I don't care so much about the 2 p.m. manipulation. Okay, price is stalling here. Okay, I want to see this manipulation. Powell coming on. Okay, what was this manipulation move? So came up. Wait. No, I'm tricking. I thought this was an SMT here. It's definitely an SMT with Dow, or the SMTs here. Yeah, we had an SMT. SMT here, sell off. I don't really see too much opportunity within that though. So that's just me personally. I'm not gonna trade right at FOMC to trying to expect to see this, but this is a market maker sell model. Why? SMT between NQES, clear bearish order flow, clear original consolidation here. Okay. I would now possibly looking to short this to all these stack lows here. I'm just gonna go ahead and enter here. I'm gonna look to enter here. Market order, and then I'm just gonna look to see all these stacked equal lows. I feel kind of comfortable with this as being the manipulation. Okay. 2%. We'll put you on market order, and we'll see. Ideally, I would like to trade off the lower time frames, but also those lower time frames can get you chopped up. Boom. Boom. Bread and butter. Bread and butter, bro. Bread and butter. Notice we've had that manipulation move here. We've had an SMT at the highs. Price doesn't really need to head lower. We now have retail support here. We now have low resistance liquidity. Come back up. Displacement. I guess the better entry would have been probably off this order block here. I kind of entered just for the sake of entering, just the sake of trusting that manipulation. We end up heading down and then having that nice. Yeah. So manipulation here at the highs. Like this manipulation move is the one that you want to catch. You don't really care so much about this manipulation move because you can't really frame a setup around that. Okay, so let me mark that out. SMT. Okay, and then let me send that into the Discord. This is September 20th. Yeah. Alrighty. And then notice how we're probably just gonna complete the sell side of this curve. Higher time frame. What was I saying even before we were looking at this? What was I saying even before we were looking at this? Like, tip my hat or toot my horn, but it does feel nice. But I don't really care. I'm not here to like try to be right. I'm not here to try to sound better than I am. I'm really not, because I'm gonna make mistakes. I'm gonna mess up. I'm a student. I'm always looking to learn, looking to improve. So if there's any way to improve, I will look to seek that. I'm not here to be arrogant, but look at where price ended up heading. Dang. Now we end up really selling off. Like this was just your low hanging fruit. Like if you're looking to trade this, bro, you could hold for this original consolidation, and I kind of never really see that. But yeah, if you're trading this, you can look to trade and hold to this original consolidation, 100%, 100%. Okay. We'll do at least one more. We'll do at least one more, and I honestly might just stay on here and just backtest, just because I actually love doing this. I love doing this, and we might do this for a while. Okay. We'll go to July. We'll do July. July 25th. Do 1,000 pairs. NQ. ES. YN. Okay, and then we'll go start date where to. Wait, what was it? July 25th, I believe. Yeah, it should be a Tuesday. Okay. FOMC July 2023. Okay. Hopefully I haven't like gone to this price action on previous FOMCs. Okay, cool. Okay, cool. Again, I'm gonna mark out. Here, we'll speed it up just a little bit. Just can't make sure I don't spoil it because I feel like I'm gonna do that. I'm gonna go too far. There's been plenty of times when I've backtested and I haven't spoiled price action. Okay, this is still London. This is London. Looks like we manipulated in London. Looks like we're probably gonna have New York continuation to all this low resistance. Looks like we've taken buy side, and it's looking like just all the look of this is probably gonna be the draw for FOMC. Just by the look of it. Okay, 2 p.m. Gonna mark out 2 p.m. And I'm gonna mark out 2:30. Those are our key interest points. Gonna make this one purple just for the sake of it, because that's what we've been doing. Can't switch it up right now. All right, so let's carry our way up to FOMC. Yeah, like I was saying, expecting New York continuation. Manipulation at these highs to then distribute to these lows. That's what I'm looking at. That is what I'm looking at already. Just by looking at this 15-minute chart. That's what I'm seeing. Okay. Let's zoom out. Bearish order flow. Ooh, it looks like I have back tested some of this. So some of this price I probably haven't. I don't remember it. So don't think that I this is just some previous back testing. I'm gonna delete. We come back up, we rebalance. This just looks like bearish structure in my opinion. It's pretty clear. Bearish structure, so wouldn't want to fade what price is doing right now. Ooh, where is this high? Ooh. So we have left stacked with highs on ES. So we definitely have SMTs here at the highs. Yeah, we definitely have SMTs here at the highs. So, very bearish here. Very bearish here. Stack lows here. This is looking like we'll possibly have sell side of the curve here. This is what I'm looking at. Like, it's higher probability that we're going to target these lows, that we're going to come back up and take this high. I know we have equal highs up here. But just by looking at this, what makes sense for price to do? What makes sense for price to do right now? We're in premium. Premium of this range. Would it make sense for price to come all the way back down here? No. Yo, so how you doing? Did you change the room? I moved. So that's why I wasn't really active this weekend. That's why I wasn't as active. I moved, but yeah, I'm doing good. But yeah, I have been moving, so I haven't been having too much time to. Well, I kind of have moved in. I still have some furniture I have to move around and stuff like that. But yeah, I've been moving. So last weekend I was kind of busy. But how you been too? I'll be live tomorrow for FOMC. I just wasn't live today and yesterday, if you guys didn't see, because of ICT being live. I decided to just kind of soak in his information, soak in that little boy's knowledge. And okay, we now come back. We've taken external range liquidity, so now I'm looking to internal range liquidity. So I'm looking to see, do we have a daily? Is there a daily fair value gap below us? Perfect. This is the draw on liquidity. This fair value gap. Okay. I want to see manipulation, ideally at these highs, so then come back, leave these lows. Should have low resistance liquidity here. That's what I'm just looking at right now. Okay, go higher right now. Go higher. Yep. Tag this high. I'll soup this. I'll actually look to soup this. You can call me like Tro soup. I'll look to soup this. You announced it like a week ago. You moved out. Yeah. I've been saying that I've been moving. All right, turtle soup here. Putting my stop at this wick. Fill me in on this. Obviously, like I'm gonna give it some room for me to potentially be wrong. But okay. Turtle soup. Wait. Okay. Limit. Okay. Tap me in. Cool. Okay. Tap me in, cuz. Okay. That's just like an early prediction. Obviously, I would want to see it play out, but this is looking like we're gonna have manipulation and then have distribution. So let's see. Let's see what happens. Okay. Wait, did we get tapped in? Okay, we did. So I'm expecting this to be the manipulation. Clearly. Do we have SMT at the high as well? Yeah. Tap me in again here in this fair value gap. This just looks way too clean. Just looks like way too clean. Which honestly, I'm kind of a little scared because we have that 230 window. But I'm gonna trust the model. Okay, got filled again. Yeah, that's what I'm saying, bro. That's what I'm saying. Because I thought that was gonna play out too. I thought that was gonna play out. But notice how at 230, that's then where we're gonna have the manipulation. So it's probably best. It's probably best not to. That was a nice soup, and we're probably gonna head to these lows now. We're probably gonna head to these lows, no doubt in my mind. We'll put a little market order in, just for sake, just for journal sake. Yeah, look at that. Okay, no, yeah, okay. This makes perfect sense. This makes perfect sense. What time is it? 3:11. I'm expecting the rest of this to probably be chopped. Us to probably have a market maker sell model here at the end of the day because we'll probably could come up within this fair value gap. We've already had the manipulation move. We're not going to head higher. So this is probably going to be market maker sell model down to this low. But this kind of, we have taken this low. So this is high resistance. So I wouldn't really love to see that as a market maker sell model. But we're more likely to head back down to this low than we are to head up to that low. So we'll see what happens. Yeah, but not really expecting it yet because that is high resistance. Yeah, okay, that was. I don't like that. I don't like this move either. Okay. Okay, this is a good study. This is a good study. So at 2 p.m., we end up having a manipulation move. So then at 2:30 having the real manipulation move, which is what I was looking for. This soup wasn't bad, honestly. Like this still was a soup. So I guess it's just whatever. But looking at this, we've come back up to then take all of these highs here. All of these highs. All these highs. Look at all of these highs. Low resistance. So we're taking all these highs and come back up. Take all these highs. That's your real manipulation move. There probably is an SMT here. I can already tell you there's an SMT. Don't have to see the SMT, but we know that there's an SMT. Come into this high, which also is this fair value gap, makes a higher probability for us to reach into this fair value gap. Higher time frame structure is bearish, so I'm looking for shorts. Come back up, accumulation. We didn't look at the day the profile as well on the day. Okay, so London manipulation, London tags us here. I would expect to see New York continuation. So I would have expected to see continuation, but we did kind of continue. You're lagging. Oh, bro, don't tell me. Really, is it bad? Is it bad? Might have to get new Wi-Fi at the crib, I guess. It might be my computer, bro. My computer's done the work the past like 3 days. Come back up to then take these highs, SMT, then come back down to take these lows. And then we probably have an SMT here. Let's look at that thesis. The fact that we have SMT at the highs, and then we probably have SMT at the lows. Let's come back up. Notice where ES is. ES is taking these highs. SMT at the highs. Okay. So we had SMT at highs. Then come back down. Then we don't take these lows, but we have an SMT at the lows. So that proves that thesis. Notice the market isn't really going to reverse. So the reason why we ended up reversing here at the end of the day, which I want to see us come back down and take this low, is because we had an SMT and because this is high resistance liquidity on the 1 minute. Look at this. High resistance. We come in and we take this low. It now becomes high resistance. We've now taken liquidity. So we are less likely going to come back down and head lower because this is high resistance. And then we come back up. We take the high. There could have been a setup. All right, cool. We'll see. Hopefully it doesn't keep on happening. If it does, I'll have to get something checked out. All right, and then we have fair value gap here. This could be in your entry. Then come back up and take this high because this is low resistance liquidity. So I'll look at the recording. I'll see if it's bad. Maybe it's just because I'm live right now. It doesn't look like I have. It doesn't look like I'm lagging on my end, but I probably am on your end. Okay. So what is this? July 26th. Okay. Send that in the Discord. Okay. We'll do at least one more because I didn't get that one correct. I took a loss there. But I had the right idea. It's just I got cocky and I didn't align it with the time in which we're probably going to manipulate. Okay. Let's go to like 20. Let's do 2021. Cuz I don't know any of that price. Like I've never back tested in 2021. Okay. We'll do like the back half. We'll do September 21st. Isn't that a song? The 21st night of September. Wait. No shot. Earth, Wind, Fire. Yeah. Is it the 20? Hey. Yeah, that's a okay. That was random. Okay. Don't mind me. Don't you remember the 21st night in September? God. Start date. The 21st night in September. That's where we're going, y'all. The 21st night in September. Name FOMC. Okay. Lock me in, fool. Dude, let's just backtest for like 5 hours. Can you imagine? I honestly enjoy this more than like me personally backtesting. Usually I'm not gonna get ahead of myself, but usually I'm usually so bad at backtesting. But today I've been decent. Like we can't lie. I've been kind of nice with it. Okay, this bearish order flow. Expecting to see this low be the draw. We come back up, retraced. We haven't probably come back to equilibrium of this range. Almost equilibrium. We probably have on in ES. This tool you're using to backtest is free. You have to pay for it. It's FX Replay. You can get a free trial, but I pay for it, but for Notion is to journal. Notion is what I use to journal. So I can show you guys my Notion journal, but I made a video on this before, but pretty much I have like my journey, my trades, things to work on, weekly improvement, daily bias, things like that. And then I have some backtesting notes in here. Then I have notes in here as well. And then you can go in here, and then I have like PA review, and then I can go in here. And then this is how I keep my notes. I also do it in Discord as well. I didn't do PA review today or yesterday, so I need to get on that. That's probably what I'll do. And then as well as that, like my videos are always journals, so that's why I like doing this. Because like every single video, like this stream is a journal. So notice how on ES that we have retraced in equilibrium. So I'm going to continue to be bearish here. I want to see manipulation move at these highs and then come back down to these lows. So that's what I'm expecting to see here. But we could come down, manipulate these lows, then come back up to come take these highs. That could be a possibility. Okay, Tuesday. Let's get to it. Asia, we don't manipulate. New York, we end up manipulating. So, If I would have gone one more, I would have spoiled us. I would have ruined. I would have. That was close. I've done that so many times to where I've accidentally spoiled what price does. It's the worst. You guys know what I'm saying? Maybe it's just me, but. Alright, so we come back up. We've taken this high. I would like to see us probably have an SMT here, which I don't think so. We probably have one with YM. Yeah, notice this high. Notice this high right here. That's your SMT. I'm expecting to see distribution lower, but FOMC hasn't started yet. Just by look at this, we come back up now into equilibrium. Is this a daily fair value gap? Now back into the daily fair value gap. This looks very bearish. Also is a BPR. Notice this. BPR, balanced price range. So I'm expecting to see this low be the draw. This is where my eye is heading, to this low here. Let's see what price does. We haven't had any very meaningful manipulation. Actually, in Asia we had manipulation in Asia actually. That was very nice. New York AM continued. I want to see manipulation though. Okay. Hide these indicators. I don't want them on. Okay. Let's get straight to it. Looking for this manipulation at 2 o'clock. We'll zoom in just a little bit. Bearish order flow. I'm expecting to see us come back up, manipulate a high here, to then head lower. This is looking like a market maker sell model. This is looking like your lowest entry to then have, or this is looking like your lowest entry. This is looking like first stage, then possibly have second stage. That's what this is looking like. Okay, let's see where we manipulate. Ooh. So we've now taken stops here. Okay, this is good. You want to see manipulation move out to highs. We've now manipulated both sides of the market. We have taken both sides of the market out. We've now taken these stops here, and we have now taken these stops here. And I'm expecting this to be distribution back lower. This ultimately is a draw. This is the original consolidation. Okay, we keep on distributing higher. Obviously, right now at 2:30 is when we're really looking to enter. This is just that first manipulation move. So we're not looking to enter here. We're looking to enter in on that second distribution. I will go complete the 2022 ICT model. See you on top. Hey, see ya. Have a good one. Have a good one, brother. I appreciate it. Let's look at YM. I do want to see where YM is at. Just kind of have some more to support your bias. They don't gel together, like, just don't trade. Okay. YM looks kind of bullish here, actually. We came into that 15-minute fair value gap. This does look bullish, but I kind of do like a bearish sentiment here. Let's reevaluate. We have respected this higher time repeated right here. This 1 hour fair value gap probably is what this is. Yeah, we have respected this 1 hour fair value gap, 1 hour order block. So we kind of have manipulated at the lows. Let's look at this. Was there a way to possibly enter this? I guess this fair value gap. Looking back, this fair value gap probably would have been the best. We had manipulation at these lows. Do we have an SMT? I know I don't love to just like always look for its ground for an SMT, but no, we didn't. Or did we? Here? No SMT at the lows. Probably with YM now. Okay, let's see what this is going to do. Because we really care about this move. Do we? Yeah, we still have the SMT here at these highs. We're now taking these highs. I'm gonna subscribe to the bearish idea here. I think these lows could be the draw. I don't like this FOMC, but I'm bearish. Yeah, I would look to short this. We cannot reverse from this. We can't reverse from a consolidation. I refuse. I'm just gonna short this just for theory's sake. I'll put like a wider stop on it too. I'm just gonna short this for theory's sake. This is just backtesting purposes. I would not actually take a trade here. Okay. Yeah, I get stopped out. Why did we reverse here? Do we have an SMT at the lows actually? I see. This is why we reversed. We had SMT at the lows here. ES is taking that. So that's why we can reverse. Normally, if order flows, this is what I'm saying. Like, if order flows bearish here, we can't reverse from a consolidation. But since that we have an SMT at the lows here, I know it's like equal lows SMT, but or did we actually take that low? And we're also within a higher time PD rate. This is a 1 hour fair value gap. We can now reverse. All right. So I was wrong in this FOMC. This is bullish. Actually, that does make sense. It does make sense. Well, actually, we did have a bearish move lower. So we were bullish originally, then bearish, then bullish. So we kind of had. Look at deliver here. Look at deliver here. If we zoom out, what is this going to be? It probably looks like a wick on the hourly. Lower, higher. Look at this candle. This is a doji on the hourly. So that's what we kind of had here. So we'll screenshot this, put this in the chat. September 21st, not the 21st night in September 21st. Or SMT. Jeez. I've been saying SMT too much. Maybe I should need to stop looking at SMTs. Okay. All right, one. We'll go over one more. We'll go over one more FOMC. One more FOMC. Should we just do November? Let's do March. Let's do March 16th. Let's do March 16th of this month. Great session. We'll do $1,000. NQ. ES. And then YM. And then we'll do, what did I say? March 16th? That sounds right. March 16th. Okay. We need to end on a good trade. 2021. Is that right? 2021. Sorry, y'all. Yeah, I believe it's 2021. Yeah, 2021, March 16th. Well, technically it's March 17th. Okay. What time is it where you live? It's 4:34. Sorry, it's 4:34. I use New York time on my computer, so I'm pretty much on New York time. But right now it's 6:34 New York time. Yeah, I don't know what's up with my Wi-Fi. I think my Wi-Fi says I have lower status. I need to get that fixed. Okay. Overall sentiment, just by looking at this looks bullish. We have low resistance liquidity above us. Higher time PD array engaged. We have just ran about this high here. All right. Let's see. Okay, make sure not to spoil it. 7 a.m. Ooh, that was close. That was close. 2 p.m. Ooh, this is gonna be a nice look. Notice how we're consolidating here. So literally, whatever side we manipulate from, we're just gonna distribute the other side probably. That was close. Look how close I was. I almost, if that makes sense in your eyes. I don't know if that makes any sense, but like I almost went a little bit too far and then would have spoiled what the price action was, if that makes sense. That's what I'm trying to say. I would have spoiled it. Okay, let's look at this from just a top down. Daily. Zoom out to the daily chart. Come back, and this could be a weekly imbalance. It doesn't. I doubt it. Maybe. Jeez. A lot of annotations over there. We don't have any weekly imbalances we're keying off of. Looking at this on a daily chart, daily inverse for value gap is the only like PD array you could really have, and then daily volume imbalance here. These are like the only PD arrays I see on the daily chart. So actually that does look very nice. Daily inverse, daily volume imbalance. Let's zoom into 4-hour structure. Right here, bullish price run. This is low resistance liquidity though. So we do have low resistance liquidity below us, but we are in bullish order flow. Do we have an SMT at the highs? Would this qualify for us to possibly have a reversal? Yeah, this can be a reversal because we have SMT at the highs. Dang, we have large SMT here. Ooh, this FOMC could spark a reversal. Notice the divergence between the two. ES the highs all the way up here. ES the highs all the way, or NQ the highs all the way up here. This could spark a reversal. So that's something to know. Just on like the 4-hour structure. Let's zoom in to that intermediate term structure. This structure looks bearish. We have an reversal consolidation here. And then we have failure swings here to the left of us as well. Notice here, you've had your low risk entry. You've had your first stage. And then this looks like this could be silver bullet here. This looks like it could be silver bullet when that intermediate term high is confirmed, if that makes sense. That's kind of what I'm looking for. I want to see a possible manipulation up to these highs here to then have distribution back off lower. So we'll see if that's the case. Okay, where are these highs on ES? ES, they're right here. Right now, what have we been doing all day? We've distributed lower. Let's look at these profiles as well. Let's see what we've done in Asia and London. So in London, we didn't really have any meaningful manipulation. So therefore, I would expect to see price manipulate here at these highs to then head back lower. So that's what I'm looking for. But we'll see what happens. We'll see what price does. It's all about what price does, you know? Okay. I was close, bro. I got that on the dot. Is this 2 o'clock? It's 1:59. Okay. This is probably the soup. Do we have an SMT as well to confirm that? Smart money reversal. Let's pull up Dow. I just want to see what Dow's doing. Oh, yeah. Oh, yeah. Like, I'm expecting us to dump lower. Like, this just makes sense. It just makes sense. This is... I don't like how this happened in the original. Like, you know how there's 2 phases of manipulation? I don't like how this candle's at the first stage of manipulation. But this could be distribution back lower. We're going to see what's happened. And notice the wick. Notice the wick. What is the wick doing? The wick is telling us the story. So I'm expecting these lows to get met for sure. But I kind of want to wait for this second stage. This second manipulation. Okay. This could push us lower. Stop on it. Is this just bullish day? Is this just bullish price action? Yeah. Wow. I was expecting to move back lower. What time is it? 3:26. I'm not looking to short this at all. Wow. Okay. So we just had continuation. So did we just had distribution here. We just had distribution here. Why? Let's find out why. Let's figure out why we just had distribution here. Why would that make sense for FOMC to literally just distribute? FOMC just distributed. We pretty much just had distribution. I see. See, there's certain things that I just don't see because I'm just like kind of dialed in and not really looking. SMT here at the lows. So it would make sense for FOMC to hypothetically just distribute here. Had that SMT at the lows. Notice how we just didn't have this two stages of manipulation, which you would normally expect. We just had that one manipulation. And that's kind of what I was talking. Is the model clear? Like, does this look like a clear market maker buy model? I don't know. Preferably I would just stay on the sidelines during an FOMC like this. Like, it's not as clear. Like, this doesn't look like the clear draw going in the head of the day. Like, if I'm just looking at this structure, we've now had displacement lower. Like, it makes sense that we're gonna head to this low. Like, this in my opinion looks more like a market maker sell model than it does like a market maker buy model. Does that make sense? This, in my opinion, just looks more like a market maker sell model. But this is just my opinion, and the market's always going to be right. There's maybe news prior. Yeah. Possibly. Yeah, possibly. We had that SMT here, and then just distribution, and then distribution. So, okay. We can do one last one. We'll do one last. Okay, what was this? Here, I'll take one from the 5 minute because it just makes sense because we only had like one. Okay, what? This was Wednesday, March. I'll have a picture on the 5 minute, and then we'll also take a picture on the 1 minute. Yeah, we'll send that to the Discord. Hopefully, y'all are getting something out of this, and I think it'll be helpful. Like, there's no such thing as just putting in work that won't pay off, you know. Okay, let's do June 15th. We'll do one last one, and then we'll probably end stream, or I might just continue to backtest. We'll see. I love doing this, so, and I haven't been live recently, so it just feels right that I do hop on here. It's 2021 July 15th, right? That's not right. June. Yeah, June 15th. Let's double check. Yep, June 15th to. Well, I mean, this date doesn't really matter. Name FOMC. Okay. Let's get into it. Okay, let's zoom through this a little bit. Hopefully I don't spoil it. $4 a.m. 12 p.m. Okay. It's 1 p.m. Oh, that was right on the dot as well. Okay, what is price likely going to do here? Let's see. Zoom out. Let's just get a higher time frame perspective. Wait, I just realized on the last example, that daily inverse and that daily volume imbalance, I didn't even refer to at all. I like zoomed out to the daily and I said like, hey, we're in the daily fair value gap, daily volume imbalance, and I didn't even note it at all. I didn't even pay attention. Wait, this kind of got spoiled though, cause don't we sell off here? Don't we sell off here? I kind of spoiled that. Like I'm not familiar with any of that price action, but I think we ended up selling off here. So at the high, we'll figure out why. Probably like I'm expecting us to sell off here as well. Okay, NQ has now taken this high. So where's this high on NQ? It's all the way down here. Now come up, we've taken high. So external range, where we like to head back to, internal range. So my eyes are already right here. We've just taken external range liquidity. Price goes back to internal range liquidity. We know that. So external range to internal range. Let's zoom into structure. We haven't really had a market structure shift yet. We zoom into the 1 hour. Have we? We still have not had a meaningful market structure shift. We zoom out. This is a very powerful PD ray. This is a RDRB. Redelivered rebalanced PD ray. We have a fair value gap here. Price could spool up and reach towards. We now have clear sell side resting here. So this would be the target that I'm looking at. And notice how this low is nestled within that fair value gap that we're looking at. So this now becomes the clear draw. We now have original consolidation here. Original consolidation nestled within that fair value gap. This is higher probability liquidity. We now have a 1 hour fair value gap. So this is kind of what I'm looking at. Let's zoom into 1 hour structure on ES as well. ES, we have had a market structure shift, so ES looks a little bit better. Where are these PD rays on ES? Come back up. Where's this high? All the way down here. So we do have SMT at the highs. So I'm expecting distribution lower. This looks clear in my opinion. 15-minute structure. We've sold off here. I want to see possible manipulation. We have a low here, so we'll see what happens. Oh boy. Oh boy. Well, I guess just hop away from your charts, bro. Notice why do you think that possibly happened? Why do you think we just did that on FOMC? Why do you think that happened? Because the manipulation already occurred. This manipulation between NQ and ES already occurred. So therefore, the FOMC is just gonna be a delivery towards the already existing draw. FOMC isn't some fairy tale thing that's just going to like spool the algorithm in like some place we wouldn't expect. No, the FOMC is gonna push us to the already existing draw, which was that. So let's see what happens here. We already had that manipulation move, pull back, fair value gap. Like that was. This just looks very clear, but we'll see what happens. I don't know. Higher time frame. Still kind of bearish. We'll see what happens. Daily fair value gap. Original consolidation just got liquidated. I want to see what this 230. Can price reverse here? Are we able to reverse? Think about it. Higher time for PDRA. Daily fair value gap. Do we have SMT at the lows? Zoom out here just a little bit. Alright, but yes, probably taking this low. Yeah, so we can reverse here. Overlapping SMT here. Ooh. Your ideal entry would be this fair value gap here. Actually, I'm going to get a close proximity entry. I'm gonna go back up here. This looks nice. We have higher time for SMT. Zoom in. We have internal SMT. The SMT that lies here. We got 2% just for journal's sake. Looks like we're gonna get stopped. Alright, price is just very bearish here. In terms of entries. Now could this be the actual entry? Now could time be right? Notice how you you wouldn't want to enter here because this is the manipulation. Okay. We're probably now going to distribute up to this area here. Because we've now had that another stop punted. So like if you're going to enter like I tried to, we're going to have that stop punt. Yeah. Exactly. Exactly, bro. See what I'm saying? Like 230, wait for that manipulation move to happen. Okay, 230 manipulation happened, and then you look to engage. But here, this manipulation move, I wouldn't really be looking to take a trade. I mean, I guess you could have traded out the pullback of this imbalance back here, but I wouldn't really look to take that. Is my stream actually lagging? That's actually very disappointing. I guess my stream's laggy. I'm going to have to get that looked at. But yeah, that's kind of the price action we had. So I'm not... We've had five examples. And yeah, so that's FOMC in a nutshell. I think that FOMC is pretty clear. At 2:30, like this PDF says, shout out Trader Diego, just spreading his information. I'm not claiming that I have this information. Look out Trader Diego on Twitter. Definitely very. I like that guy. He has some good information. But that first stage is that first manipulation, and then you're looking for the second manipulation at 2:30. So yep, that's what I was looking at. Dang, almost 2 hours. Long stream. Anyways, I'm gonna head out of here. Hopefully y'all have a good rest of your day. Hopefully y'all have a good rest of your night. And I will see you guys tomorrow back for I will be live tomorrow for FOMC, so I'm excited for that. I'm excited to actually be live for FOMC. Yeah, very excited.